guys? Been a while. Sorry I didn't make a video last week, but here I am. So I haven't really traded too much in the last 2 weeks or so, but I think the way I'm going to approach this video is to more or less do kind of like a end of week markup, if you will. So I'm going to do everything kind of in hindsight. Probably not going to do bar replay, but this time I'm actually not going to do bar replay. What I'll do is I'll kind of show you how I more or less study price action. This is typically how I do like either my end of day markups, or in this case, like I haven't been on the charts too much, so it'll be more of an end of week markup. But what we'll do is we'll look at from Monday till today, Friday, and we'll focus on what the 4 hours kind of done and what the 15 minutes done, and we'll just circle up some zones that look like could have provided some good trades, and we'll just dig in the 1 minute and kind of see what fits our plan, right? And then figure out the best places to take profit, and then maybe, obviously in hindsight, the best place meaning the most R possible, but also reasonable profit levels based on internal and external range liquidity concepts, right? So understanding that the extremes are typically the best places to find trades, but then of course, as price starts to take out some of the structure from the previous leg, right? If price was bullish and now it's turning bearish and we're trading short, some of that bullish leg from before in theory is just internal range liquidity. So if some of those demand zones starts to fail, we can expect the others to fail and we can target the lows, something like that, right? Yeah, outside of that, again, I hope you guys are having a nice December. It seems to be fruitful for a lot of people. I know a lot of people have been passing challenges, and holidays are coming up. I can't really think of a better Christmas present to yourself than getting some funding, you know, so keep it up. And if you're working hard, just obviously keep going, and we'll be here if you need us. So yeah, obviously we're gonna do GU because that's all I do. So sorry for anybody else that wants anything else, but keep in mind this stuff applies to every pair. It's not just GU, it's just I prefer GU. And a lot of people ask, you know, why do I prefer GU over EU or whatever? And it's just for the pure fact that GU typically likes to move between higher time frame POIs a little bit quicker than EU does. I find EU to be a little bit slow in that regard. So while I might have to use a bigger stop loss, it tends to move more pips, so it kind of evens out. And then with a bigger stop, I also feel a little bit more safe. So totally personal preference, not really a big deal what you trade. I think another common question is one pair enough? Yeah, 100%, definitely enough. And then another version of that question is one pair enough if you're working full time? I still believe that to be true. I think one of the best things that you can do if you don't have something, you know, if you're not working from home, for example, and you don't really have a lot of time to check the lower time frame or kind of be involved, or maybe you'd feel rushed and make some impulsive decisions just because you're like, well, I gotta get back to work, I want to trade this, I want to hit it, but I don't have my setup yet. Sometimes you don't get your setup, right? So trading from 15-minute POIs is pretty important, right? So when we kind of go through this and circle some of the 15-minute POIs that have given good reactions, we'll try to see if they were worth trading directly from, like, you know what I mean? They might not give us the exact setup that we look for on the lower time frame, but playing from extremes, chalks, and general, hopefully we'll see flips and that kind of stuff on the mid time frame. You know, that might be hopefully helpful to some people looking for 15-minute stuff. Sometimes it's a little bit different. You can wait for like that kind of setup that, you know, we typically look for, where supply will give a reaction when demand is in control, and then trading that flip zone. But typically sometimes with the higher time frame, mid time frame zones, those setups just take a lot longer to develop, and they're not there as frequent as you would find on the lower time frame. Anyway, let's go ahead and get into it. So again, GU, this is the monthly time frame. just to kind of get our bearings straight. Now, one thing we have to remember is that GU has a pretty bearish structure to it coming from here. We've basically, let's see, we've taken out this low and then we kind of gave a pullback, right? But this supply zone pretty much just halted this, and then it came down, it built these equal lows, and then we got a huge wick to the upside. Now, one of the things that we have to try to figure out is that if this wick is just a liquidity grab, does that mean that this was the true high, and now that price has taken this high out, we can expect continued bullish price action? Or because this didn't close below this level, could we then infer that maybe that this supply zone will hold and then this should continue lower? Obviously, it's going to take a long time to figure out, and it's not something that we can necessarily predict. On the monthly, there isn't like an insane amount of structure to work with. Like, I don't have any data over here or anything like that, at least, you know, for this data feed. So as of right now, again, we're reacting off of this monthly supply, and we are currently pressing into this monthly demand zone, right? So we've had this candle print a higher high, higher high, higher high, higher high. Obviously, initial reaction, pull back, price came up, swept whatever happened in here, mitigated something at the extreme of this, and now it's continued to the downside where we're making the lower lows. So as price pushes into this demand zone, we kind of have to be a little bit cautious because there is the chance the price will return bullish and then just continue higher. Again, with that being said, it really depends on how strong this supply zone is. We could see lower lows still. So that being said, that's the general picture of the monthly, right? It's always good to get a good idea of these, because if something does set up for a long here, it'd probably be pretty good idea to get in here, because we're talking a couple months of bullish pressure, even if it is just at this high, right? So you know, just keep an eye on these things. And then let's go to the weekly. Right, again, here's that monthly supply that we've tapped into, right? I still got all these circles here. I'll delete those. So at the moment, right, price has taken out this, right? So we kind of saw this as our external range of liquidity. So this was the highest point of this overall push up, and then price pulled back. It just took out the high, and then it just started ripping to the downside, right? So external range of liquidity has been swept. These parts here, like these demand zones, are considered internal range of liquidity, and they've been taken out, right? Now we've reached this part, which is like more of a weekly flip zone, right? So I don't have that marked up, now we do, right? So price pressed into this supply zone. We got this reaction, took out all these lows right here, and it didn't quite tap this demand here. It's actually just off from it. Let's just see. So it looks like what it did was it took a little bit more out of this larger kind of range here. Right, that's what price pressed into. Again, that's not really something that you can really manage, but is that a monthly? Yeah, it's this monthly candle right here. So, you know, with that being said, there's reason for price to obviously react off the supply, halt here, and then continue higher. So again, we have a weekly flip zone. This is COVID right here, right? Sweep of those equal lows as well. So sweep, V-shaped recovery almost, right? Reaction to supply, flip zone. This could be seen as a weekly flip zone, right? There is a lot of reason for price to continue trading higher. So again, in terms of like market forecast, this is something I want to be aware of ahead of time. So what I'll do is I'll mark this up, say daily supply is currently in control. Price within weekly bullish flip, right? And we'll just keep an eye on it. Let's see if we can clean that up a little bit. Before I continue, I need to make sure my mic is not muted, because I've done that before, and the last thing I need to do is have a video that is muted. All right, cool. So, right, weekly flip zone could be pretty big. Now, one thing we'll do is we'll kind of inspect the flip itself. Obviously, we had a bit of structure in here. And it looks like this candle here is actually higher than these, and then this one drops lower than this one. So this itself is a sweep, so there's some structure in here. So this price coming down here is a sweep of this liquidity right here, right? So then price comes down, reacts off that monthly, pushes up, and pushes right back down. So this could be considered a sweep. Price pushes up, 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 right? And then fails to break higher. This one takes out that low right there. So at the moment, what I could do is I could probably refine this down to this. This clearly mitigates this guy right here, right? So now we have a bit of a demand chain. So demand chain, weekly bullish flip zone. This could be seen as a catalyst for a pullback, right? So there's a lot of reason to look for maybe some strong longs in this. But anyways, so yeah, that's higher time frame stuff. So the question is the rest of this internal range liquidity, or is it just going to be this for now? We'll see. We'll see. All right, so I think I will drop into the daily now. Again, really choppy price action through last December. I remember this month. I used to do a lot of coaching calls on this one. That was when price was like pretty much in this kind of range. This was a good month. It's hard to backtest, but in the 15-minute, if you just play the extremes and the ranges, it's quite a bit of R in there. It's definitely worth taking a look at. But all right, yeah, cool. So daily, right? One thing is that we'll notice on the daily is obviously we've been bearish. We had this sweep of liquidity, demand reaction, right? We had this sweep here and this wick. Price then broke that demand, price pressed right back into that supply zone, giving us a very strong short opportunity on the higher time frame. So any shorts from here would have been really good. I'm still holding shorts from this level and this level. But yeah, these are typically the things we're going to look for. Now, one thing that we can kind of see is that we've hit this weekly zone. I have this marked as a catalyst for pullback. I'll probably just leave that as demand for now, right? And we've been kind of rounding out. So on the lower time frame, what we're probably going to see is you're probably going to see price coming down correctively, and then 4-hour structure highs starting to be taken out, right? So the question we need to ask ourselves, is price actually ready to continue a bullish move, or at least get a pullback on the 4-hour, or are we just kind of setting up for price to build liquidity and then just come right back down? Because what it looks like is price just took out this corrective move, tapped into something here that we'll look at, and then it gave us a really strong bearish momentum to the downside, which again, in theory, could just be tapping into some demand just to continue higher. So we're the 4-hour now. Right, so we have that general picture in the back of our head. We have a note up here so that we can kind of remember like what the overall trading plan should be for maybe January, right? If January wants to be bullish, I want to get in down here, right? Or even if it wants to keep coming lower for a little bit longer, if it starts to run bullish, again, I'm going to try to take those longs and swing it, because there's a very good possibility that price might just continue higher. So okay, so here I've got our kind of typical models that we're looking at, right? And again, no different than anything else. These are just flips, right? Sometimes a flip can be a series of like a few candles. Sometimes it could be structure, right? It could have actual structure to it. It all kind of depends on what your risk appetite is and what you're kind of used to playing. If I'm not like the quickest trader, I can't necessarily play like a quick flip where that demand fails immediately and then wicks right back in like the very next candle, and then that was the entry. I'm not good at those. It's just not my cup of tea, but some people are, like Albert, he can do that. But personally for me, I look for like a more of a drawn out kind of flip model where there's structure involved, and that's kind of what I look for. So again, the concepts are the same. It's like, if supply is in control, why does demand give a reaction? Typically it's to build liquidity, right? if that reaction gets swept and maybe comes into a supply chain and then that demand fails, it gives me reason to trade the short, right? So I know that supply is in control, so I feel comfortable taking shorts. I know that there's sweep liquidity here and supply chain, so I know that there's intention for price to continue from this level. Whereas sometimes you get the same setup, only that reaction doesn't get swept. It's just like price was bullish, there was a little bit of demand here or something, it continues higher. Here you get like this little wick up and then price just continues down, right? So you get that demand reaction. This doesn't sweep anything, right? So where do we trade from? We look at the extreme. So price comes up here, that's your sweep. Sometimes you get a re-entry where price will come back into the sweep itself, and you can either break this even, save and keep your risk off the table. You can take 25% off at 1 to 4, whatever it is, or you can take that break even and get back in if you still feel good, like if the lows are going. But again, just be consistent in how you approach it. Right, cool. So again, 4-hour structure at the moment. We've come in bearish. We've had a nice supply chain that's kind of formed. Obviously, a lot of this was building before this low actually went. Obviously, there's a huge candle, but as price pressed bullish into this supply zone here, it never took out the high, and then it just continued to fail to take out the high, and it just continued bearish. So each of these zones here probably had valid trades in them. I won't look into them now, but it might be worth, if you want to study it, looking at this to understand how a complex pullback works, right? Because even though the expectation order flow is still bearish, right, these supply zones are holding true. So even though price isn't necessarily breaking the lows, like we have price push up, it pushed down, right? It didn't take out the lows. The expectational order flow is still intact. We're still looking for bearish structure, right? So, keep that in mind. If you get that bearish substructure within a complex pullback and the overall order flow is bearish, look for the shorts from the extremes. Easy money, right? So then price finally takes out the low here, right? Obviously, again, it's just wicks, and that could be problematic for some people, right? All this is just wicks. But what does that kind of tell you, right? It tells you that the intention to go lower is not really there, right? So we get a series of these wicks. This price action was not great. It's pretty miserable. But again, if you focus on the extremes, you'll typically do okay. Like, you can focus on the extremes, have a good understanding of higher time order flow, and then look for continuations along that path. But don't get too crazy with trying to find a reversal in the middle of a leg. There's a saying that we used to say all the time: don't diddle in the middle, right? It just means if you're unsure of where price is going, stick to the extremes, right? Okay, so again, we wick the lows, and on lower time frames, these are technically body closures, right? So depending on how you see it, you can see the body closures going lower, right? But again, a lot of people, type 2 mapping, you want to see the body closure to see that commitment. We're not getting it. And then eventually what happens is we start to take out highs, right? So this high goes, this high has now gone. All these highs right here have now gone. So because this took out that low there, what I can say with some confidence is that this is potentially just internal range liquidity, right? So that would mean that this level, being in the middle of the leg, what did I just say? Probably shouldn't consider this a full-blown reversal. What I can say is that maybe this is just a catalyst for a pullback, right? And that this demand zone here could give a strong reaction to the upside, right? So in terms of the 4-hour demand zone and looking for bullish price action, this one's looking pretty good. So we go to the 15-minute. Oops. What have I done? All right, so let's look. Where's Monday? Monday. Cool. So again, I'm not doing bar replay. Apologize for those who want it, but I do kind of want to spend time with the family tonight, so I'm just going to try to knock this out. It's already been like an hour, but that's okay. Right, so again, what I've done is, you know, I'll do this part with you guys because I do think it's important to understand like what you're looking for, or just in general, like what's a good kind of area or level that you might want to figure out why you want to study it, right? It's all about the reaction, like why did price do this, and how could I have gotten in, and all that stuff, right? So we'll go back to Monday. Sorry, Monday is down here if you can't see it. I use FXN week and day separator, and I turn off pretty much everything except for show days of the week, just FYI. While I'm at it, FXN Asian range is another thing that I do. It helps me show the Asian range here. Now, typically this, when you turn it on, all this stuff will be checked, and there's crap everywhere. Literally all I have on in here, it says show New York box, which is false. All I have is, if you go to style, fill Asian range, everything else is off because I don't care about anything else. I just want to see the Asian range, right? So turn all that off, style, turn this on, that's it. Okay, so right now, obviously we have to worry about London and New York, right? So here's Monday, that's Asia, right? I like to keep this stuff on because it gives me a good bearing on where I am in the week, especially when I'm back testing. But you know what we'll do is we'll look again at just Monday. So first things first, this is London, right? You can see Asia ends, that's London right there. Obviously it looks like there's something within this that was a potential trade, so I'll circle it, right? And what I want to do is I want to look left. I just say, all right, what did it react off of, right? So here it looks like it's basically a flip zone, right? We have a little bit of supply. I'm just going to mark that bigger zone, right? Reaction came off of something within this wick, right? And if we look at this, right, why is this wick important compared to these ones? Why did price, let's actually mark this, why did price come into this one and take out these ones, right? And again, typically what I like to see is I like to see the initial reaction. Okay, I can't apparently circle that, right? So this is something I want to go and study. So I'm just gonna close it out. So, right, whatever. So, okay, I'm gonna speed it up a little bit. I think you get the idea, right? So here, why did price run short? Was there an opportunity to trade this short? And what I can see from left is that we had a pretty nice supply chain, right there. So I'm going to circle this because I want to know what happened in here, and then we'll just continue on. So again, that's London, that's New York. Here, Tuesday, we have price doing something, right? Price looks like it came off of some of this supply and then decided to continue higher. If we look in here, we need to figure out basically why did price come down here and then go up, right? If we can justify it, then we can try to study it. So what I can see is that this supply zone didn't really give a reaction. Actually it must have. All right, let's see. I'll cover that high right there because this high took out that high there, so there's a sweep. There's something happening here, right? And then what we can see is that this tapped into that, right? So clearly this kind of supply zone, or this wick, having taken out that high right there, right? There's something happening. So now I want to go and study that. How could I have gotten into that long, right? Here, again, right? We'll kind of have to determine if we're this. See, this is the tough part, right? We're very much ranging. This is where price is kind of, if you guys like Wyckoff stuff, this is where price is accumulating, and we basically have gotten, this might have been that spring, right? This was that kind of test right there because it looks like it taps right into this stuff after taking out the high. So something to study if you're into that kind of thing, right? Right, so now we have a couple zones to study up. We've got this one here. I gotta make this bigger so I don't lose track of it. Oops. Right, so then here, obviously we get a reaction to the supply, which makes a lot of sense because that's part of the supply chain, right? There may have been a short here for New York, right? Obviously it doesn't continue, it doesn't take the lows, but I would say that's probably because we started taking out these highs, right? And there's potential for bullish intention, right? So again, the price then pushes down. Here now we're talking about Wednesday, right? And this is definitely like CPI or FOMC, I can't remember. All right, so looks like there was a nice, actually no, it wasn't nice. This looks like a horrible short to be in. You probably would have lost some hair in this short, but it worked out well enough. All right, so then, yeah, Wednesday, Asia. It might have been a long in here. This wick is really confusing me. Don't know what that's about, so we'll go in and we'll study it. One thing that we see here is that this larger zone, I'll go to the 4 hour real quick, just to see what that is again. Okay, right, so yeah, so this was basically part of the supply chain, right? So I didn't know it was a catalyst for a pullback at the time. For me, it was just supply, right? That was a reaction. And then obviously it looks like price takes out that high right there. And that's kind of what solidified the bullish movement, right? So we'll go back to the 15. And where are we? Right here. Right, so obviously this much larger demand zone, that's the weekly demand, right? So we need to study that. And what we can look at is we can try to see what did it tap into, right? And it looks like what we got here was a bit of a demand chain. Yep, so we can justify that reaction. I'm going to turn this into diet demand just to kind of get it out of the way a little bit. And let's see, where else are we? Okay, so we have this, which comes into that supply. Now this is more of an external range liquidity sweep, right? So we can study this, right? Because again, what's our range? We have this low. Realistically this low, but we have this low and this high, and price has been trading within it this whole time. What you'll notice is that before we got a true pullback into the extreme of this leg, it didn't come until we took out the external range liquidity, right? This is an indication that supply is failing and that demand may be taking control. Obviously, once it took out this high and then it just shot to the downside, and this was a pretty intense, let's see, what time is this? This is about 10 hours worth of price action. Really, this kicked off about here-ish. So more about 5 hours of price action, right? Pretty intense price action for this day here. And then obviously continued into Thursday. So, right, so now we have this that we want to study. Looks like I've got some lower time frame annotations already. But again, what we're doing is we're looking at the 15-minute. We could probably just use this whole thing, because really all we're doing is we're going to look for the reaction on the 15-minute, right? And then we might refine it on the 1 minute to find something a little bit more clear cut that maybe you want to take a risk entry on, you know? And yeah, all right, cool. So that is probably good enough. We'll circle this. We'll see if there's a trade in there. See if there's a trade in there, even though obviously it didn't work out. We still would have considered it for shorts. This one's kind of tricky, right? Looking at this reaction, it's in Asia, but it looks like it's coming off these buy to sell wicks, and these buy to sell wicks are actually reacting off of what, right? If you're thinking about it along with me and you're saying I need to justify this reaction, what do you see here, right? Just imbalance. But we know better. We know that price doesn't just react off of balance. Typically, if you have these imbalanced candles and price just comes off of it, it's because it's using the larger range. So my guess is that price is coming off of this, which I know it's whatever, it's kind of crazy looking. We'll go to the 4 hour and just yeah, so see, this is what we just marked up. It's this giant range, but it's a 4 hour candle that swept this liquidity. So when price came down, it came right back up, and then there's something here. It's possible there's a clearer 1 hour thing. It might be a 2 hour thing. Either way, right? The point is that to justify these wicks, we can use the larger range to kind of do that. Back to the 15. That being said, though, what I'll do is, just for the sake of having it on file, I'll just kind of do this. And just say it's the range of that, whatever. I'm trying to keep it clean, though. Okay, so obviously now this is something, and I'm hoping that you can see it pretty clearly from here, right? Obviously this is something that we want to get involved in. I want to know what happened here. I'm kind of bummed that I didn't trade this day because I'm looking at the setup on the 15 minute, and this is one of those times where if you trade just the 15 minute, you'd be doing pretty sweet. So, right, what do we have? All right, if we kind of look at a macro view real quick of all the current price action, we've recently taken out the external range liquidity here, indicating potentially that supply is no longer in control, right? Reacting to the extreme of this range, part of this demand chain in the weekly demand zone, giving a reaction like this, and then popping up off of this, right? There's a lot of reason to trade longs. So that's the current picture, right, for our intraday plays, right? Everything else we talked about in the beginning of the video is more of your macro view for position trading, understanding general order flow, the higher time frame. When it comes to intraday stuff, you're going to focus primarily on the 4 hour and the 15 minute, right? And then obviously if you want to, refine the 1 minute for better entries and higher returns. Now again, what do we see when we look at this? Price pushed down, it failed to take the lows miserably, right? It didn't even like get past this buy to sell wick here, right? So we look at this, and I want to know what happened here. Why did price react and then just shoot up? Well, if we want to justify this reaction, we look to the left. What do we have, right? Now we had this sell candle. The only reason I'm picking this one is because this one takes out that high, right, and then continues lower. So it's possible you could see that as a sweep of liquidity, but then what you see is lower prices, right? But this is the last buy to sell, which is also valid, right? Again, it doesn't matter too much. You just want to justify this reaction, right? So price pushes up, reacts to that supply zone, and you can see that this is the first reaction, right? Price then pushes down, it pushes up. We need to look at the lower time frame to see the order of what happened here, but this wick here took out all this liquidity, right? So what we can do is basically we would say what? That this is our 15-minute flip zone, right? Now if we wanted to trade this, I've just realized I still haven't gone into lower time frame stuff yet. I'm still talking 15-minute, right? From here to what this is a 4 hour zone that we had marked up before. It's 12R, right? It's pretty decent. All right, so Thursday, again, that's Thursday. We'll come back to this, right? Let's circle it up. All right, we want to know what happened here. We also want to study what happened here. And then Friday, right? So price hit this. Again, this is the 4 hour demand zone. Should look at it real quick, right? It's the kind of, sorry, I don't have it marked up very well, but we have this there. not even really the best one, to be honest, but right, price comes down, that's the reaction. And my guess is we'll go on the 15-minute to look at it, but what you'll notice is that this wick right here, that's the initial reaction. So it's not like price didn't just rip through it. It reacted, it took out these highs here, and then it built a bit of a supply chain. Right, so it's not random or anything like that. I just didn't have it marked up. So right, and then obviously this wick here takes out all these highs here, so another super liquidity. So again, justifying the reaction, maybe you have it marked up beforehand, maybe you don't, but regardless, took out all these highs right here, came into this guy here, which is a flip zone, and now it's giving this bearish push back into a strong demand zone, right? And we've basically shown that we might want to trade bullish. So 15-minute. So I want to look now at this. Clean this up real quick. And this reaction here is New York. So let's go ahead and just circle it. Maybe we can find a trade. And then this here is London. Again, probably would have had a nice 15-minute entry here, as long as you cover your highs and give it some room. So we'll study that. Okay, cool. So let's go back to Monday. We'll go to the 1 minute. And again, I'm just looking for this stuff, right? Where is that? I guess it's on the floor. All right, just really looking for these guys. All right, so keep that fresh. Let's go to Monday. Right, and again, this is how I typically, I usually do it a lot faster, but when I'm looking for how do I study price, right? Where are the best areas to get in trades? The first thing I want to figure out is what are the best POIs to trade from, right? And study the general structure and order flow and figure out how I can, in a live market, pick these POIs out and then look for entries, right? So that's what I'm trying to do, and that's what I typically would recommend that you do as well. And again, you don't have to do bar replay. You don't have to be a bar replay master. Just study, study, study. I said this last time, but when you're taking a test, right, you have all the time before the test to look at your notes, to study, to understand things, write things down, and just study. And then when it comes to the test, you don't have that in front of you, right? So doing it this way, where price is in hindsight and you can study, right, and try to find a consistent way to approach the market, that's what you're doing. And then the live market is the test, right? So you apply yourself there and see if you can more or less pick out these things while it's happening. So let's look at London. What's about, do I have, I should have 1 minute data, so I'll just go 1 minute data. Bear with me for a sec while I scroll. I almost bar replayed there. Almost did it. Monday. Okay, so first things first, right? We know that, I'll just clear this out for now, right? Obviously, this is a pretty strong reaction on the upside. One of the things we need to do, though, is we need to figure out why it did that. Now, for whatever reason, I didn't mark up that. So, right, we talked about this, but we didn't clean it. We didn't mark it up, right? We have that flip zone. So now we can go back to the 1 minute. Right, so again, let's study this. Okay, so this is where it gets kind of dicey because you had that 15-minute zone. It looks like obviously it got tapped into here, and then price pushed down, 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 down. This reacted some on the left. I don't want to get too far on the left stuff. And then we got bullish again. Now what you can see is that price obviously came into a level of supply. We got a reaction, right? Price then pushed down, pushed up. We got that bullish order flow, and then price came into what looks like more of a range. Actually, did it come into this? Yes, it did. Put this demand. All right, cool. So yeah, so that barely taps into that. Maybe not even. I would just say it's just this range, right? And then, right, so generally speaking, this is that wick on the 15-minute, and then price started to push up. And what I want to, kind of curious to see is like if price came into this range here. Yeah, all right, so here's the low. Let's see what that tapped into, right? What it tapped into? It tapped into this, right? This part of the demand chain. So we can go ahead and refine that down to that guy right there, right? And again, we're just studying. We're not necessarily saying we would take a trade off of that, but the 15-minute wick, it makes sense. There's a lot of reason for that to happen, right? All we want to know and all we want to do is trade that reaction. We don't have to trade off of this, right? But you can see how accurate this stuff is, right? You can see it taps it literally by the decimal. It's like right on it. So clearly, right, we take out these equal lows. Equal lows, we take out the low, we take out the high, right? So we chalk to the upside, we break structure to the upside, and then what does price come into? Right? So this is a seemingly pretty obvious trade, right? Now the thing is, you have to ask yourself, how does it fit the plan? Does it fit your plan? Are you just trading the reaction? Are you trading just the extreme, right? So what I want to do is I want to see, was there a reaction to supply, which I can say here. My computer's slowing down for some reason. It's driving me nuts, right? Reaction to supply, right? That price finally dropped. Obviously, price comes down. It takes that low, mitigates something left that we can justify and say that looks pretty good, right? Then that supply fails. Price does not come back down into it until here, right? Where do we break even? Typically, people might say, that's a bit far for me. But you can see, right? How does it work? Works pretty well. So this is a trade that I would very much take. And I think, and I'm pretty sure a lot of people took it. You get away with a nice 2.5 pip stop loss. I hope this video isn't laggy or slow after rendering, but right. And we can just go ahead and aim for what? The 15-minute extreme, right? We can either aim for the supply zone itself. That's probably your best bet. If you aim for the highs right away, you want to see the highs fail first before you start aiming for supply failures and that kind of stuff. So aiming for the 15-minute like base level of the supply is probably solid, right? And then there, 16R. Okay, cool. There's your London trade. Now, I know people are probably interested in looking at scalings and that kind of stuff, but maybe use that as homework for now. Look at this area, see if you missed this entry, how you could have got on based on the entry model itself, and just study it. Like if we look in here, no, I'm not gonna do it. I get sucked into this stuff. Let's move on. I'm sure there's a scaling. There usually is. Like you could do it right here, right? Supply, reaction, sweep, break of that supply, price comes into something in these wicks. There you go. Okay, so here again, this is the extreme of that 15-minute zone, right? So for some reason I've got like 2 levels marked out. Oh, it's because they're overlapping. Yeah. Anyway, that's the 15-minute zone. And this does not quite tap into it, right? Actually, it does. So this taps into it, right? So again, what you want to figure out is, would you have traded from this extreme? Yeah, I mean, let's be real, probably, right? But we need to see if there's a setup for us. Oh man, I really hope this recording isn't laggy. Okay, so what we'll be looking for is basically the tap in. We're looking for that reaction to demand, and then we're looking for the sweep. So if we're looking at this, what we'll notice is that this That's aggressive. This high doesn't really take out that high. So we basically have equal highs here. So I wouldn't necessarily use this demand. You can kind of see what happens here though. Right there, reaction. It doesn't sweep anything. What happens to it? It gets swept. And then what's it trade into? It trades into something within these wicks, something in the lower time frame. Typically this extreme candle, but not quite. So something's happening on lower time frame. Regardless, it's not necessarily an entry I would have taken, but we can kind of justify this reaction to the downside. More than likely what would have been okay is because this one takes out that high there. This is a reaction to that. It's pretty messy. Also, what time is this? Oh yeah, no, it's New York. That's fine. That fails to take out that high, so we have this. This just gets wicked out. It's not great. Anyways, it's possible that you might have looked for a short here, right? Let's say we did, and we took a loss. Right? No big deal. You get a nice reaction. This is a big bearish candle, but ultimately it wants to trade higher. That's totally fine, right? What you'll notice in this level is that there was multiple mitigations of these extremes. So even if you'd missed maybe the initial one, this one right here, for example, you probably could have found an entry later down the road. So, okay, so price presses a little bit deeper into the zone. If we look to the left here, because I'm interested what that tapped into, I feel like I could say that it tapped into something. Oh, I see. Okay, yeah. So, all right. This 15-minute zone mitigated that. This mitigated that 15-minute zone. Looks like this here took out some of that liquidity, right? And then obviously dropped to the downside. So price tapped into this extreme of whatever the hell this wick is right there. So I can justify the reaction pretty well now. Whereas this one, you know, let's see what this one did. See how that doesn't really mitigate anything, right? So maybe that's a clear way to stay away from that entry, is that it doesn't really mitigate anything at all. Oops. So let's see, right? So now we have a good reaction in this level here. This, where's our demand zone, right? That takes up that high, that high, that high. This one right here, that's our demand zone. Do we have a reaction to that demand zone? Right, where's our initial reaction? This one, right? You see we get this nice buy candle. Does it take out any liquidity? Nope. So what do we trade from, right? And you guys should be following along in your heads. If I say that flip doesn't take any liquidity, where do we trade from? Everyone's answer should be the extreme, right? So here, get a nice short opportunity from here. Uh, 2.5 pips, you might be in a little bit of trouble, but 3 pips, you're definitely good. One second, something's killing my computer here. Huh, I don't know. Anyways, where do we look for break even? Right, this guy right there. Okay. Now what happens? Price comes up, and we took out that low, and what happens? It comes up and it breaks us even, right? That's just how it is sometimes, right? Okay, now the question you want to ask yourself is, if I traded a 1 to 4, 25% off, I'd still be in this trade, right? So we can pretend that was the case for you, because obviously not every breaks even this way. Obviously there's different ways to do these things. So for those of you that do 1 to 4, you would still be in it and you'd be solid. The other option is to look at this structure in here, right? We come bullish into this level and then we start to make bearish complex pullback, right? There's structure within this that's being bearish at the moment. It's bearish, sorry. So what I want to do is I want to look at this. I want to see if there's any reason to continue trading short, right? Let's say you missed this trade, right? Obviously, we know that we broke even on that. Fine. If we're looking at this, we want to say, all right, what level of demand gets a reaction? This one. Right? You see the wick, buy candle, no sweep of liquidity. You see that demand fail. What happens? That high gets taken out. What does it trade into? Right? Trades into this. So here again, right? Maybe you got into this, maybe you're doing 1 to 4s, right? And you get to stay in this trade, right? Same thing here. Demand, I mean, no real reaction. There's wicks, there's buy to sell wicks, but again, I don't typically trade those, personal preference. Here again, no reaction to that, and then there's this, right? So if you had stayed in these trades, you would have pretty nice movement to the downside. Realistically, probably would have looked at some 15-minute lows. And that's from here, right? So here's a first level that you could have looked for potential take profit levels, and then from here, this low, right? Or potentially this low, because there's the flip here and that kind of thing. So you could have looked for that. This one, if you looked for this low here, you wouldn't have gotten it. Yeah, it just wouldn't have happened. Right. So, right, again, let's move on. So we have now this, right? So we can kind of study this a little bit. What we have is a demand chain. Right, again, because I just want to justify that reaction there. Right, pull back. This is spread hours here. I'm interested in that. All right, so here now we have Tuesday. Oh, that was only Monday. I gotta speed up. All right, Tuesday. So what's happening here, right? How do we justify this reaction? Now, one thing that we can see is that this was a 15-minute zone. We looked at this on the 15-minute to kind of see what was going on. Why did price come down and more or less react to this level? Now, what we noticed is that on the 15-minute zone, this was basically our initial reaction. Now, the tough part about this is that it reacts and there's no sweep, right? So we would have anticipated potentially a sweep of these candles here, and then price would have traded higher. However, what it ended up doing was just trading off of the demand zone itself, right? And then trading higher. So we'll look to see if we could have gotten in somehow. Right, price, it's pretty choppy here, but regardless. Right, so where's our first level of supply? Here we have that wick takes out that high. I'll kind of use that candle as well, the buy candle before the sell, right? Here's our initial reaction, right? Price breaks that high and then just taps into the demand itself. Our next level of supply is, we have this guy here. Right, and then price reacts to that. Price pushes up, reacts off of this supply as well. Pretty rangy PA. This reaction here, there's no sweep. This ends up getting swept. Now typically, again, this one doesn't take any liquidity, but it doesn't sweep anything. This mitigates. All right, this is where stuff gets tricky. So like this, right, is technically a little supply zone. That's why this reacts to it. This also is technically a little supply zone because it just keeps trading a little bit bearish. And then what you notice is that this is where price kind of reacted, right? So price came right back up into it. You got that huge wick, it pushed up. So now price is basically reacting off of this. Again, it might not necessarily be something that you trade, but if you wanted to study price and learn the reaction, that's kind of what's happening. And then you have this guy here, which is part of that demand chain, right? So again, we're just justifying price. Doesn't necessarily mean that we'll trade it, right? It's kind of whatever fits your plan. Here I can say, all right, fine. Here we finally get a reaction to supply where we don't get a sweep, and then price pushes, breaks that supply, and then sweeps this level out here, right? Right, so we get that sweep, price pushes down into this demand chain that we know is right here now, that's been built from basically these levels. So this one up, right? Nice demand chain, supply failures. The ultimate kind of structural high fails at this point, sweep of liquidity, and then continued higher prices. We could have traded from this one. We also could trade from this one here, right? As part of that continued demand chain. This would have been probably the ideal entry, so we'll just mark this up. That's a 2-pip stop loss. I don't typically go lower than that, so I'll leave it at that. Gives us nice room down to the downside to go from there. Here is where we would break even, because that is a catalyst that gave us the entry, right? And then we do get to remain in this one, which is great. And there's probably nice continuations in that as well, so make sure you study that. So then again, what we have here, this is the 15-minute high, right? So we just target that, right? Because again, once price starts to take out some of the range from the previous leg, it's just internal range liquidity, and we're playing the supply extremes or the demand extremes and going from there. So at this point, just Monday and Tuesday, you've taken 16R here, potentially we broke even on this one, right? And then this one's running at 24R, right? You're done for December, honestly. I mean, obviously depending on your capital and that kind of stuff, but you know, it's one of the things I actually kind of wanted to talk about that I forgot about in the beginning. But one of the things you have to keep in mind is that funding in general is something that will come with consistency. That's what you're going to build towards, right? It's not necessarily saying, oh, well, I only have $1,000 in my account, I have to trade more so I can make more. That's not the best mindset to have, right? It's better to say, I'm just going to work on building a consistent approach to my trading and just work on small gains, right? Just 5R, 10R, whatever makes sense, right? Work on building a plan that you can execute over and over again. Work on a consistency model for targeting, right? Where do you TP? Where do you partial? For your stop losses, for that matter, you know, like, do you, like me personally, I don't go below 2 pips. I just don't. Where do you break even? How are you going to do it? Is there a time that you will break even at structure? Is there a time that you will do 1 to 4 at 25% off and then let it run, right? There's got to be a scenario for everything. But when it comes down to it, don't trade more to make more, right? Pick higher quality trades and then just sit on what you've earned. Go for funding and then build the accounts up, and use that money though to build your personal account, because I can't stress how overhyped funding is. It's obviously an amazing opportunity for people who don't have it, but it's not realistic trading. It plays on like an entire cycle of emotions at the most extreme level, right? From the challenge itself to verification to keeping the account to being in drawdown, none of that stuff will hit you as hard in a personal account. It's not the same. So just keep that in mind as you approach these funding challenges. And like Albert always says, take them down from the pedestal, right? Because they're great opportunities, but they cause way more stress than trading should actually have. If you were to trade your personal account and build that account over time from a consistent standpoint, or fund it maybe with your funded accounts, you will not have the same stressors with drawdown, with challenges, just general pressure. Just keep that in mind. All right, let's move on. So, right, we've come into this 15-minute zone that, again, we've marked up because this is what we're doing. We're just back testing. We have these zones predetermined, and we're focusing on the extremes and what we've kind of circled for entry. So, what happens here? Price pushes up, we hit that supply zone, and then how do we find entry, right? What fits our model? So we'll look at this first because this is where price really started to kind of give way, right? We hit that supply zone, we got structure breaks to the downside. Here, you know, like people might get thrown off by this, like, oh, well, this is a chalk. I'm like, sure, but what the hell did it hit? Nothing. Some catalyst for a pullback, some supply zone in the middle of a leg, right? It's not going to give you shorts. So price pushes down, so we need to figure out basically where our demand zone is, like where's price reacting off of. So there's a couple ways that we can look at this. Obviously, the more obvious example for demand is probably this sell candle. However, we have a flip zone that we got to pay attention to, right? We have supply, reaction, and what you'll notice with this reaction is that this candle, where's the high? 04. Okay, they're actually trading at the same exact level, right? So I can't say that this level is necessarily trading lower, right? But it looks like that's the reaction, and it looks like what's happened here is that it swept that reaction, pushed the upside, it failed to take the high, and then it continued lower. So now what we need to do is determine, again, why is this reacting off of what it's reacting? And what we can tell is that it's coming off of this range, right? Because why else would this wick just stop right here, right? If we look, there's just imbalance. What does it come off of? This candle on the other side of things, which means it's coming off of the range. So price pushes up. All right, get into it a little bit. All right, price pushes up, and then when it pushes up, right, that's the reaction. Higher high, higher high. This was just lower low, lower low. Sorry, lower high, lower high, lower high. Right, so there's no sweep of liquidity here, right? And there's not really an extreme to play from. You could play this wick, right? Or you could use it as a POI and look for reaction. But we understand this to be a flip that doesn't sweep anything, so we can expect this high to get taken out, right? So we keep that in mind. So this here, right? It does as we anticipate. We don't get too quick to, you know, pull the trigger, and don't take an unnecessary loss here, right? Even if it comes off this and just tanks, it sucks, but follow your plan, right? So at the time, or at this moment, we have this wick as a nice POI to trade from, right? In this case, price does trade above it. So what we'll do is let's just see what the actual stop loss on this would have been if we had traded from this level. Right, so 3 pips would have covered the high, but obviously it would have got taken out. So that being said, we take a loss here. No big deal, right? So at the moment, we have 2 wins, break even, and this loss. We're doing pretty well. It's not a big deal. So what happens after we take out this high, right? What do we know about external range liquidity in general? Is that often price will come and take the high. And I know that Phantom and Albert like to preach, don't always trust that first high, that first drive in, right? Often price will come, make a new high, and then that's the real setup. So depending on how aggressive you want to be, or if you really want to kind of subscribe to that theory, then you would have avoided this trade anyways, right? But let me move this over so we can see. All right, so we took a loss here. I'm going to clean it up so it's gone. All right, so now what we have is we have a sweep of that liquidity. So I will now clear this out. And now what I'm going to look for is kind of the same thing. I want to look for that reaction. You know, where do we get nice kind of demand reaction and then failure and then go from there. Well, excuse me. When I'm looking for a demand zone, I want to see it fail to basically trade above the high. So I gotta check these out because all these trade higher. That high there is 15. That high there is also 15. So these are just trading at the same exact level. So here we finally get a nice reaction. It looks like it's coming off this sell candle, because if we look, the buy candle, it doesn't quite reach it. See, doesn't quite reach it. So we justify the reaction. We use the sell candle if it wants to work. And then what happens? This price here is our reaction. Price pushes up. Is there a sweep? No. This is basically our sweep from before. Has it been mitigated? Briefly, right? So change that to supply, right? Reaction pushes up. This doesn't really sweep anything. So you can say that it's going to get swept. Right, so there's your sweep. Now what we need to do is we need that demand to fail. So here, there's two ways we can look at it. This demand failure doesn't happen until this point, or potentially what we can say is, see, these are such large candles though. Like, you'd have to go to lower time frame to understand what's happening with like these reactions right here. Like, why did price react to this? And the only thing that I can think of is that there's demand on lower time frame there. So reaction, price pushes up, that gets swept. Here's the demand failure. Where to retrade from? This guy right there. Right, fits the plan. Short tool. Hopefully stop loss isn't too big. Right. That's too close. We get 3.2 pips. And where's our break even? Right, break even is right here. Guys, I'm really sorry if this video is choppy. I can feel my computer slowing down, so I'm a little afraid that the recording itself might be choppy. So if it is, I'm sorry. All right, cool. So now what happens, right? We're in this trade. Oh, sorry, let's break even. What we'll do is we will go to the 15. That's this one. What's this one? Oh. All right. This is a long video. All right. So yeah. So price comes in, and where's our first demand zone? Right here. Right. So this is our first point of demand that could potentially give us those higher prices. Obviously, it gets taken out, and the price kind of trickles lower into these zones here. Whether or not we've actually would have TP'd at these levels, I probably would have looked at something like this, to be honest, to TP at. So, you know, depending on how you manage that trade, you would have either taken some partials or you would have broken even on it. I do tend to just hold it and let price travel to where I intend it to. So in this case, I don't think I would have gotten what I wanted out of it. And yeah, so I probably would have broken even on this trade, to be honest. All right, so let's move on. So now we have Wednesday, and we have London, and we have an insane wick to the upside. Honestly, if I saw something like this, you know, it's news. But a lot of times I might just try to avoid it and just say, whatever, I'm not interested. Just because it's not exactly easy to kind of read that price action. Now, obviously, what you could do is go to lower time frame and look for these reactions. Look for price to run bullish and then trade it. So what we can try to do real quick is we can try to justify these reactions. And it looks like price. So this, right, we need to justify that reaction. Price comes into that. That's our supply zone. There's no real other supply here. I guess you could say this, but price doesn't react, right? It just goes right through it. Yeah, there's nothing. So that's our next supply zone. That's our reaction. Price pushes up. Price pushes right back down. And then it taps into this guy. Actually, I don't even know if that hits it. Yeah, it does actually hit it, but it's very, very, very tight. I don't even know if you would have gotten tagged on spreads. So then we have, right, price reacting to supply. That supply eventually breaks. Price taps down into this level right here. There's no real sweep of liquidity, right? Looks like price just plays off of this. And, you know, while I'm discussing this, it doesn't always have to be black and white in terms of, you know, like, oh, it didn't sweep, it has to sweep or else it's not going to work, right? That's the majority of the time. Obviously, it's not always going to happen that way, but again, it's about consistency. Which, like, rule set do you follow? And if you follow that rule set, stick to it, right? I mean, in theory, you could say this is a sweep because price pushes down, it pushes up, it pushes down, right? But it fails to close below this, fails to close below that. So this wick right here technically sweeps liquidity within this, and that becomes part of the demand chain. So in theory, what you'd be trading from, highest probability trade would be this. Man, this lag is killing me, right? So, because here, right, supply, and again, we follow that rule set, we get a reaction, there's no sweep, so where do you trade from? You trade from the extreme. So, right? So even if you're sitting there and you're saying, man, I'm itching, you know, I want to get in this, I want to get in this, I want to get in this, and you traded this reaction, does that fit your plan? For me, it would have been no. That would have been a trade that does not fit my plan. It would have been not a good idea to do that, right? However, if I am patient and I continue to monitor order flow and structure and just general price action, I get my setup immediately after. Supply, reaction, no sweep, break a supply, sweeps, where do we trade from? The extreme, demand chain, right? Easy money. That's got our name written all over it, right? And these are things you got to keep in mind when you're sitting on the charts. It's so easy to be impatient, so easy, right? But this is why we do this stuff, right? We gain an understanding of how often our setup might work played out, you know? Obviously, it's not going to be I mean, it is every day so far, but you're not going to catch it every day, right? Because if we miss this, was there an opportunity? I don't know, not after. Right, and then what do we trade to? Oh, I'm sorry, where's our break even? Right, and you'll see, right? Typically, with our model, the break even point, when price gets to it, nothing really happens. Obviously, we took a break even on another one, but that's because it had to more or less, again, distribute. It was looking for more orders. It needed more before it dropped. And then it still didn't even really drop that far. Or maybe I'm thinking the other trade. I don't know. Anyway. Okay, let's zoom. Let's speed up. This is another 15-minute supply zone. Demand, right? Price fails to break above these candles here. A little bit of a demand zone. Price pops up. Price taps into this. That's the initial reaction. You can see that this candle here pushes down, pushes up, pushes down, pushes right back up, takes out these highs. That's the sweep of liquidity. That demand then fails. So here, there's a nice opportunity to trade this. I'm sorry if I'm starting to go fast, but this is going to be a long video. All right, 4.5 pip stop. That's not going to really fit some people's appetite. Is what it is, right? You break even at this low. Here, what is price doing? I have these marked up from before, apparently. This is simply, I think, following the supply chain at this point. Right, so this, oh, I'm sorry, this would have broken its even. That breaks its even. Right, here, another opportunity to get right back in. A little bit better stop loss too, so I'll take that. I'm going to delete this because it's driving me nuts. Circle. Right, and then we break even here, and then price then pushes down, and we are pretty much good to go. And it's funny, this stuff, it's like clockwork, right? Look at this. Look at this. Look to the left. What do we see? What's this? What's this reacting to? This, right? So we have demand. Does it sweep anything? No. Right. That's our sweep. Here's our chalk, right? This takes the high, that takes the low. Price then pushes up. What does this mitigate? Some larger range, a 15-minute zone maybe. Price pushes down, takes that low. Now we have this. Okay. Now the question is, where do we break even on a trade like this? Typically what you're going to want to do is either just do that 25% off at 1 to 4, or just take probably this low, because that's the low that brings the trade back into the entry zone. And again, you know, one thing, I'm going to do just one more trade because I think you guys get the point. But the common theme here is what? Selecting solid 15-minute POIs, going down to the 1 minute, and finding your entry model, right? There's many ways that you can take a trade, but there's a lot of ways that you can lose trades too, right? Like obviously there's going to be scaling opportunities, there's going to be stuff in the middle, right? But if you were to just focus on the extremes and you didn't mess around in the middle, how would you do, right? This is data worth gathering, right? Could you finish your week on a Monday? From what we saw, yeah. And honestly, a lot of times I focus pretty hard on Mondays because I know the type of price action that I get on GU tends to be more of like a V-shaped pattern where once London goes up, New York likes to come right back down to where it started, or the other way around. I just get in, get out, my week is done, right? So that being said, obviously we have two nice trades here. We can look to the left, see what we kind of got from this. 15-minute. We're going to look at this one next and we're done. Right? So here, right? This one took out the external range liquidity, which means what? That there's a strong possibility that we'll trade into the extreme of these legs. So while what I would do if I'm in two trades like this, right? Typically what I like to do is I will hold the original position, or like the best positioned trade, and then I will close out the second one to lock in profits. So here we broke even here, we got right back in because that's what we do, right? We don't give up, we just stick with the order flow. We understand what's happening, right? We trust our analysis. This one on the other hand, right, I'm happy with this. That's 37R right there if you let it ride. And again, I typically don't take a lot of partials, but what I'll say is Asia lows pretty significant, right? 15-minute structure somewhere within here, right? These lows pretty significant. More than likely what I would do is I would start partialing this thing out at this low, and probably full TP on this one, and let the other one run, right? This way we can get max profits, right? And then go from there. So obviously price rocketed towards the downside. Pretty sure there's another trade in here. You guys can study that one. Anyways, what I want to study is this one, right? Here we have a little D and B situation. I'm not going to tell you what that means, but 15-minute zone, right? Reaction. Now I want you to look at this. This is why sometimes you can get away with putting a risk entry on a 15-minute zone. If you can take that 15-minute zone and you can refine it down to your entry model, you can take the risk entry here, right? What happened when we hit this 15-minute zone in London? Price came up, it came down. People would freak out because like, oh, well, this took that high, then it took this low, it chalked to the downside. Sure, right? No problem. Take the trade. Where do you break even? Maybe break even after this low breaks, right? You now have your risk covered. You're good. But if you want to look at it on the flip side, right? After this high gets taken out and you're wrong and you take the loss or you take the break even, how do you use this to look for a future trade? Well, what I would do is I would move this over, supply, reaction, sweep. This is now a 15-minute POI, right? Typically, these setups are 15-minute POIs, right? We're just looking at them on the 1 minute, but typically they are 15-minute POIs. So then price comes down. What is this? This, if price had done this, right, where it came up, broke the high, you had a little bit of liquidity there, sure, no problem, right? But you know you had your sweep here. 100% I would be trading from this, right? I would wait for price to come in here and just smash it high. But it doesn't come back. What happens to this level? If you got a 15-minute POI here, is that level still valid, right? It's literally the whole setup. This is it right here. So for me, this is worth throwing a trade on. So what we do is you put your risk entry on here and you say, fuck it, it's worth the risk. And then, yeah, that's pretty much it. Bob's your uncle. That's all she wrote. This clearly reacts to this range here. Takes out that liquidity there, but price doesn't come back into it. So there's no getting in that trade if you don't take the risk entry, honestly. But that's like, this is textbook. Like, it literally couldn't be more textbook. If we look at the 15-minute, right, go back to this. Supply, reaction, break, flip zone. This was our first indication that supply was failing. This respect of this demand tells us that demand's probably in control. The fact that this takes this high out impulsively and this supply this supply gets that reaction, you get the sweep, you get the push up. This honestly couldn't be more textbook. Like, this is like, if you had to look in the dictionary for textbook, this is it. Not only on the 15-minute, but on the 1 minute, right? These are the kind of opportunities that if it sets up, you 100% want to, like, you want to put the trade on, right? Sometimes these levels are a little sketchy and it doesn't look good, but I can't think of a better time that I've seen that entry model, right? From top down. And then, yeah, and then here, price taps right into this 4-hour zone, 54-hour. So we even skipped Thursday for the most part, but this week we took some losses, we took some break evens, but we played from the extremes, right? We aimed for reasonable targets because it's not like we did anything crazy. We're not aiming for the moon here. But when you're playing from extremes of 15-minute zones, even if it's just a range like this, these are the opportunities that are there. You only need one of them, right? You don't need to trade 100 times in a month. You can trade once. Build the capital, build the confidence, build the consistency, and you're set, guys. You're absolutely set. I'm gonna call it there. How long was this video? I'm gonna be so upset if it was it doesn't work. This video is going on, oh, it's only been 1 hour and 20 minutes. That's not too bad at all. That is not too bad. All right, I still don't want to talk anymore, so I'm gonna leave. Have a good weekend, guys. Merry Christmas to those who celebrate it. Happy holidays to anybody else who's celebrating anything else. Look, the guys on the team and girls, we love this community very much. We put a lot of effort into it, and it's pretty awesome when you guys put effort into your own trading and you come out on top. Nothing makes us prouder. Keep doing what you're doing. If you're not there yet, you'll get there. Just keep working hard, and yeah, we'll catch you on Monday or sometime in the weekend. Later. Have a good week. Bye. Bye. Go do something fun with yourself, your family, your friends. Don't watch this, actually. It's too late because it's the end, but go do something else. All right. See ya. Bye. Seriously, go. Get out of here.